Hey guys, Matt here. So welcome to this week's portfolio update. I am pleased to announce that right now, for the first time in a long time, all my stocks fit in one window, one zoomed in window. Now you will note that Hyliion is missing. Yeah, I finally got rid of the rest of my shares. Now I am not going to go over why because I have a whole video on it, which you can watch up here. But basically, there were a lot of good comments to that video. One of them, spoke to me. I was gonna hold on to 50 shares just to sort of see, but if I'm gonna be out of a position, I need to be out of a position. None of this second guessing, stuff like that. If I'm gonna be out, I'm gonna be out, and so I'm out. Now, stocks can be bought back, so if the situation improves, I'll be happy to buy more shares. I'll keep making more videos on it as interesting topics come up, but as of right now, it is what it is, and that's all I'll say about that. Now, what this does mean, though, is, now this right here, the cash, now I want to show you something, because the cash hasn't settled yet. Once everything is ready, I will have about 5,700 worth of cash, and I kind of want to spend it. But we'll talk about that in a little bit, but let's talk about my portfolio now. So right now, we are sitting at $66,069.15. We're talking 39% gains. Now, again, that is with me getting rid of Hyliion. So, as you know, Hyliion was my worst position. So, I just want to make that clear. But right now, we're at 39% gains. And we're still at 16,900. So, almost 17,000 worth of profit. So, I don't feel too bad about selling Hyliion. But let's talk about my portfolio itself. You will notice it is a mixture of growth stocks, dividend stocks, and value stocks. Right now we're talking Revolve, which are, we're sitting at a 6x. So right now Revolve is a 6x stock. We got Tapestry reporting very strong earnings earlier this week. Fantastic earnings. So this is another one of my growth stocks. We're talking over 3x gains, so over 233%. Tesla, I don't have to say anything about Tesla. So Tesla, we more than doubled our money. We're talking Bank of America, we doubled our money. Facebook, we're getting there. Qualcomm, we doubled our money. So my portfolio is looking really, really sharp. And Gevo, I made a video about Gevo earnings this week. It was boring, which is a compliment. Gevo, we're sitting at 21.4% gains, which, for a stock that was down 20 or 30% a while ago, yeah, I'll take it. Now, back to the 5,700 in cash that I have, ready to deploy. Now, I don't want to keep that money sitting there doing nothing because I sold a whole position at a loss, and I don't want, I need to deploy into a better position, one that I know is going to make money, one that I have more confidence in. But my question is, which one? And I have some options, and I want to share the options with you. So the first option is I don't buy any more companies. I don't do it. Now, you may note, if you are astute enough, that I have a lot of stocks in my portfolio. I have a lot of positions. I have too many positions. Even now, even after dumping Hyliion, I have way too many stocks in my portfolio. And this might be a good opportunity to just not buy any more. And I could use the cash and double down on a position I already own, a position I'm down on. So AT&T. Now, I'm not going to go too in-depth into this company or any company that I'm going to mention in this video, because I kind of want to talk about it from the perspective of my portfolio and what I want. Now, AT&T, out of the stocks I'm going to mention, because I'm a network engineer, I know the most about AT&T and its business model. I just know more about AT&T and what it does than any other position that I'm going to mention. As far as what I want out of my portfolio, now I don't mind having another growth stock, but I already have my bases covered. I already have growth stocks which are putting in work, so I don't necessarily need another one. AT&T would fit the bill of a very strong value stock that I think will have some growth. Certainly not this year, certainly not next year, but we're talking years down the line after it finally, separates from Warner Media. So the first thing I want to point out about AT&T is that it is brushing damn close to its 52-week low, and I think at some point it's brushing up to its 10-year low. Now, for me, for someone who has not been in AT&T that long, maybe around a year or so, that is fantastic news for me. That is a fantastic buying opportunity for me. if you take a look at the statistics, I mean, the 4 PE is very, very low. Now, PEG ratio, yeah, I know it's high, but let's be honest. I mean, it's about to shed Warner Media next year, which is a very, a very huge asset that it has. It's already shredded itself at DirecTV. It's getting rid of all of its previous acquisitions. So yeah, it's going to shrink next year. Now, it's my opinion that after that happens, it will slowly grow over time, but I'm not too worried about this PEG ratio. Price to sales, price to book, enterprise value, all pretty low. So I'm pretty happy with most of these numbers. Now, despite, AT&T's drop in share price, share price, that doesn't tell the story of the company. I mean, for example, just looking at his quarterly income statement, like you can see the fruits of his labors. Like, for example, the operational income, take his last quarter. We're talking $39 billion in revenue, right? Let's compare it to last quarter, $42.3 billion in revenue. So not last quarter, the same quarter last year, $42.3 billion in revenue. You will note that the operating income for that is $6.2 billion. Now, take a look at this past quarter, $39.9 billion, but its operating income is $7.2 billion. So it is doing more with less. So right now, there's a proof right there. There's a lot of the proof right there. Like AT&T is benefiting from its, from its streamlining. Now, I will be the first to admit that I'm not fully happy of its removal of, Warner Media from itself, because I think Warner Media is a great asset, and I think it makes AT&T stand apart from companies like Verizon. However, I can see why it's doing what it's doing, and I can see the benefits of that just with DirecTV, and I think Vrio, yeah, it is, despite the share price, I mean, I don't have to worry about where AT&T is going to be next year, where AT&T is going to be in 5 years. This is still a very strong performing company, and after it, becomes more agile next year, it's just going to get better. And I know a lot of the reason that why, people are selling out of AT&T is because, yeah, next year after it, gets rid of Warner Media, it's going to slash its dividend. Which, a lot of people who were holding AT&T because it was a dividend aristocrat, yeah, a lot of those people are, in my opinion, rightfully selling out, which for me is a buying opportunity. And not to mention, at least part of the drop-off is industry-wide. I mean, here's AT&T stock. Here's Verizon stock over the past 6 months. Now, yes, granted, AT&T has a much sharper decline, and that's basically because of, it's slashing the dividend and getting rid of Warner Media. Yeah, I mean, it's still an industry-wide drop. Here's Verizon, 11% drop over the past 6 months. Here's T-Mobile, 14.9% over the past 6 months. And if you take a look at its high point, I mean, we're talking 20% from its high point. So yeah, the drop-off is at least in part industry-wide. That makes me feel a lot better about AT&T's drop-off. In my opinion, I don't think there's a catalyst or anything like that that's going to, help AT&T's share price until the Warner Media spinoff happens. So this price right here, it could stay this low until 2022 unless a surprise happens in the industry. So I have no problem at all. I might put all my money, I'm not going to put the whole 5,700. The goal is to put like $4,000, upwards of $4,000. I may put the whole $4,000 in this at once. I may spread it between AT&T and Verizon. I may, deposit it piece by piece. I don't know, but AT&T is one of the first companies I'm looking at. Now, another company I'm looking at, and this would be if I decided to add a position to my portfolio, it would be Palantir. Now, Palantir would not be a value stock. This will be if I decided to add a growth stock. So Palantir would be it. I mean, if you take a look at its statistics, now it is looking better currently as of yesterday. So it is looking better value-wise, but as far as being a value play, no, it won't be it. Now, I will be paying attention to price as I buy it. For example, I don't know if I'd buy it at 22.83, maybe I'd want the price to drop down a little more. But like I said, Palantir would be more for the growth side of things. And like I said, the numbers are numbers that I just can't ignore. For example, take a look at these financials. Now, these are his annual income statements. Take a look year over year. This is a massive growth massive growth in revenue. As a matter of fact, take a look at its latest 10Q. I mean, just take a look at its revenue versus same quarter last year. So 289 million to 392 million. But look at this gross profit. Like, that is a huge jump in gross profit. That is a beautiful sight to be seen, especially when it's 9 months. Like, it is like, this is a fantastic like quarterly report just by the 10Q itself. We'll get into the other stuff later. But like, loss from operations, they went from a loss of 847 million to 91 million. Like, they are, if they continue at this rate, they will probably be profitable within a year or so. A year, maybe a little more. Like, I'm not a financial expert, but like, these numbers look really good, and I can't ignore that. And I've been wanting to look into a big data company after Cloudera went private. Now, one thing I do want to point out with Palantir that I need to get through first is I have not yet listened to the latest earnings call. I did read the 10Q, and which I was impressed by, and I did watch Tom Nash's video talking about the latest earnings call, and apparently it wasn't good. Now, one thing I do hold dear as far as earnings calls themselves is how well the presenters carry themselves, because it gives evidence to how well these these presenters, the CEOs, CFOs, and whoever is on the call, sells the company in general. And if I like it when the presenters are assertive, they're quick to answer questions, they're proactive and stuff like that. If I listen to it and I don't like what I hear, and the presenters don't do a very good job at selling the company, like, that will be a mark off in my decision to buy Palantir. It won't be a deal breaker, but it will be something for me to think about when considering buying Palantir. So yeah, AT&T and Palantir are the companies I'm thinking of buying. Now, I'm not going to buy both. It'll be one or the other. And like I said earlier, I would buy each of these companies for different reasons. AT&T for value, and also for dividends, as a more stable company, because yeah, I'm down currently 11.3%. After I drop $4,000, my cost basis will go down, and I'll be being paid 8.35% between now and the split, just to hold the stock each quarter. So that will be at least 1 quarter, maybe 2 quarters, depending on when exactly the split happens. And of course, I will buy Palantir as a pure growth stocks, as a whole, as I say, a 5Xer or a 10Xer. But anyways, I'm gonna, I will think about it over the weekend, and sometime next week, I will come to my decision. But anyways, take care, have a great day, and eat your vegetables.